Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. And today is Wednesday, Hump Day. So happy middle of the week to everybody here, and it's July 13th. So let's take a look here what we got here for economic news releases. Actually, we got quite a bit of news coming the rest of this week, especially tomorrow and Thursday and Friday. So we'll start off with the import price index, not a major market move or anything, but the previous month it was at 0.1%. We were expecting right around a negative zero point 0.7, but it came in at a little bit better, negative 0.5%. So not as bad there. Again, it's not a market move or anything. So, but right now, the got Bernanke's got a testimony he's providing out there. So, they'll be listening to any comments he may have to say. And next item will be actually coming up later this afternoon, 2 o'clock East Coast time, 11 o'clock here on the West Coast. Is the federal budget. It came in before at negative 68.4 billion. So basically, obviously, it'll come in to be determined as to what those numbers will be. So let's go ahead and take a look at the headline news. What we got here, and basically, the stock market's up across the board. Actually, the Dow's up over 100 points. And a lot of that has to do with the Fed minutes yesterday coming in. Their comments that Bernanke made in the minutes that indicated possible Fed measure in the near future. Basically, it came into that they may have some unprecedented, not done before, or measures they may create if things still keep continuing the way they have been. And there could be three different options, I guess, primarily is what I'm kind of hearing. And the first could be keep long-term interest rates low, which Bill Gross came out earlier and saying that interest rates can be low for a long, long time. So we could potentially see this for quite a while. Definition of low interest rates, obviously, it could range. It could be 5-6%, which is still relatively low. But again, it's still low. Also, the other one, the second option could be potentially another quantitative easing, three. So that could be very well underway. And then a third would be just start, hitting lower the short-term interest rate from core basic to zero. So that could be another to try to stimulate things. So those are three different options I'm hearing that could be thrown out there. And the stock market, like of course, like the last time how they had the other big rebound, they like that because it's basically free flowing money into the equity markets. So the, then also we had reports today that China's economic growth wasn't as bad as it feared. They were expecting that they're trying to force themselves to slow down. That maybe it might have really slowed down, and it just came in at 9.5, which it's still pretty hot, but they for them it's kind of stabilized, so it's not like a big drop in the growth because that could obviously have a ripple effect with the rest of the world here. Ireland's credit downgrade down to junk status, and then of course they're still watching Italy. And then also what's in the news is the Congress and the president negotiating on a U.S. debt ceiling. They want to get that. They want to raise the debt ceiling. Concerns about reasons is that basically a lot of people that are collecting government checks may not get paid, from VAs to disability to Social Security, Medicare, and down the line. They're claiming that won't get paid. And if we default, that could have a royal effect around globally because people buy our debt because we basically give a platinum guarantee that we never will default. So be interesting how this goes, if it really will play out, if we don't raise it, if we'll default in some capacity or other. So these are something definitely to keep an eye on, and these are definitely unprecedented times. So let's take a look here at the bond market and what in interest rates, see where they're moving. Here we got the bond market. The bond market, as you can see, it's lower today, but don't be scared. It actually should be up here as we have a bond rollover today. Each month, if you've been watching this, has a bond rollover, and we're about 28 basis points lower. So we're actually lower here. So we should be about here. Interest rates really are about the same as they were yesterday. So there's really no movement today on interest rates or mortgage rates. So, so that's the good news. So unless the bond market, I mean, the stock market keeps ticking in, keeps on a hot streak today. If it does, then potentially it could be taking money from the bond market. Bond markets will go down and interest rates will come up a little bit. So that's a possibility. All right, folks. But stay tuned for tomorrow. We got some big news tomorrow. We got the retail. We got the initial jobless claims. We got the PPI, which is the wholesale inflation report. And then Friday we got the CPI report, which is going to be the big one this week, really, to keep an eye on for. So, all right, folks. Catch you tomorrow. And again, if you're looking to buy a home or looking to refinance, I'd love to be able to have an opportunity to talk to you about your financing needs. I'm a mortgage planner with First Cal Mortgage, and I work a lot with homeowners here in California. Thanks a lot, and you guys have a great day.